at the 30,000 foot level, what you have is MicroStrategy was able to raise from people kind of just believing in the theme. And this is from like 2020 when they launched their Bitcoin strategy through 2023 before the launch of the ETFs in the US. And that's when they had that phase of, accretive dilution. And it had a hangover all the way through to late 2024 when they were still able to hit the ATM and essentially, issue equity at a premium to their Bitcoin holdings and then use the proceeds to buy Bitcoin. But, logically and from first principles, without people kind of just believing in ever expanding MNAV multiple, by definition, the only thing you can really count on in a market with open alternatives is leverage, basically tranching Bitcoin returns into a lower risk reward instrument and a higher risk reward instrument. And that's essentially what they've done now. So I and others forecast this in Q4 last year, and then they started issuing these four classes of preferred stock, which are all exactly that. It's lower risk, lower reward returns that lever up the equity returns and make the equity high beta to Bitcoin. And that structurally is also why I called these companies leveraged Bitcoin equities. So that is accurate. Whether you like the acronym or not, BTC is a bad acronym for these things because it's already taken by Bitcoin. And I don't really like ceding the territory to the shats, the shitcoin asset treasury companies that try to call these Bitcoin DATs. I don't know why they always come around and ruin good things.
Yeah, but, I'm not super against the DATs. I just don't like the term DATs, but it just sounds gimmicky.
I mean, look, they sound about as intelligent as they did in like spring of 2023. I'm sorry, it was spring of 2024 when basically the theme that every Wall Street banker was pushing is that Bitcoin is exciting again because everybody's building on Bitcoin, because there were like 100 what I used to call SOBs, shitcoins on Bitcoin, fake layer 2 launches. And that's what MAG was pushing and Ordinals was running, and like all the shitcoin energy was coming to Bitcoin, and Bitcoin Magazine was trying to, push the view of like all crypto should be built on Bitcoin, et cetera, et cetera. And then that energy completely dissipated in the summer because they rolled with Trump instead, and basically rolling with the political energy was better than rolling with the shitcoiner energy. And so that kind of just fell off a cliff, and you didn't need to do that anymore. So basically, as soon as Trump came out pro Bitcoin in spring of 2024, heading into the campaign season, no more VCs invested in SOB companies. Shitcoins on Bitcoin basically died because it was very clear that the game theory was Democrats would have to fall in line as well, and that non-Bitcoin crypto was going to fund the election cycle, and they would basically buy their way out of all this stuff, which they did successfully. So nobody's going to jail, and everyone that got Wharton blockchain certifications over the last 5 years can keep them and hold their heads high as all these chains get rid of their tokens and just become, Wall Street financial IT projects. And we can all kind of kumbaya and be friends with the crypto people again, because it's obvious it wasn't about the tokens. It was about the tech, bro.
The tech, bro.
Yeah, it was about the tech. It's always about the technology. It wasn't about the tokens. It was just the tech. So that's kind of where we are. And so back to the treasury companies, the ones outside the US are still advantaged depending on the market. So in Japan, obviously, there's a 50% Bitcoin tax. And so, having Bitcoin price exposure through an equity is better. There are other places where they're just, large pools of capital, like Sanders Company up in Sweden, H100. They have some kind of like insurance/pension scheme for everybody. And, you can trade tax-free inside of that, but you can't trade Bitcoin in that. You can't buy Bitcoin in that. So having access to H100 stock for Bitcoin price exposure makes sense, which is very similar to how it was with MicroStrategy and retirement accounts in the US, before you had access to the ETFs. Now it's a different pitch for MicroStrategy. Now it's this, the stock is high beta to Bitcoin, and essentially the returns of the prefs are guaranteed by the huge pile of Bitcoin. And those are both very compelling pitches that he can make for many years going forward. So then we come to the other companies in the USA, And essentially, to be able to lever up, because there won't be accretive dilution just through equity issuance. That's not something you can count on for the long term, for sure. You need to be at scale, at least enough scale to be able to start issuing preferreds and to lever up. And then you also have to be creative and a good management team, and you have to look for inorganic growth opportunities, whether that's, getting a bunch of miners to, check in their coins for equity through some kind of convert structure, or it's buying Semler and getting Semler off the train and joining them with you, like what Strive did. Maybe it's getting a bunch of non KYC Bitfinex OGs to put their coins into some kind of like BVI or Cayman structure, or Malta or Isle of Man or something like that, and so they don't have to pay cap gains, but then they get the upside of at least be able to access liquidity from the stock that they are now granted without paying cap gains tax, and now they can take out portfolio loans. And like they get that value into the system, whereas before it was just kind of something they couldn't actually spend or access in any way. And so there's a lot of that. There's a lot more coins being checked in than money to buy coins right now. And I expect another announcement from one of these companies this week that will be like another big Bitcoin pile contribution, not new cash going in and buying Bitcoin for the Treasury company. So I'm assuming that'll be out in the next couple of days. And so, look, I think probably 2 months ago, in as much as there was a consensus, the consensus of like the 4 or 5 people that actually understand this shit, everybody else doesn't know shit, but the consensus of the very few number of people that understand this stuff was that you needed like 750 to 800 million of Bitcoin NAV to be able to start issuing preferreds that would have enough liquidity to be attractive. That's come down largely because of all the noise around Stretch, and the noise around Stretch just having such good product market fit, as basically being the same risk profile as a bank account, but having 10% yield. Made people go back and look at the other preferreds as well. So they're looking at, Stride, Strife, and Strike, and, appreciating those too. And I think that has brought down the threshold for how much Bitcoin NAV you need to be able to issue a preferred that will have liquidity. So I think that came down from like 800 to like 500.
Why
So
is that?
because you can, with like 500 mil of Bitcoin NAV, you can very easily issue like 50 to 75 mil of a preferred that looks like Stretch or Stride. Sorry, Stretch or Strife probably. That's very senior. Basically senior to the entire stack of Bitcoin.
Gotcha.
It's senior to the stock and anything else. So, and that gets you on the train. So that unlocks it, and that proves to the market that you're able to lever up, and that your equity is going to be high beta to Bitcoin, which is deserving of something. And you're attracting investors that are going to lend you money essentially by buying this pref, so that you can go buy more Bitcoin. And that should start that, that I hate flywheel. It's such a dirty crypto term. It's ruined forever. That'll start what should that be? Something from operations, conveyor belt. Anyway, the assembly line. I don't know, whatever it is. It's something that's just going to go, but I just don't like the flywheel thing. So it'll start that torque. Maybe, I don't know. To borrow from Saylor, because his lawyers don't like saying leverage, right? So it's torque now. So yeah, so I think it's kind of bullish. I've talked to all these guys with like mid-sized stacks that would appear to be just subscale, and like they all have good plans and good backers, and that goes for Sequans, which we are obviously like advising them on strategy, marketing, PR, liquidity, security, custody, all the things. That goes for Empery. I've spent a long time with a lot of time in the last month with Ryan and Tim and that team, and like they're very sharp, and they have a great track record of doing smart things in business and delivering billions of returns to their LPs out of the hedge fund. Obviously, you saw the combination of Strive buying Semler, and assembling kind of an all-star team of marketing and thought leadership there, whether it's Pierre and Sharish and Ben and Jeff. Like, it's a great squad. I think Jeff Park is the single most talented and intelligent person that is working in this space. And so, I was probably like super bearish on Pomp's thing just because it was Pomp, but then he recruited Jeff, and I'm like, well, shit, if Jeff's running it, like that's probably going to work. I mean, he's a super genius. So, bullish on ProCap too. Uh, so I don't think there's a single one of these that are kind of, the six that launched this year that were kind of mid-sized between like 3 and 6,000 coins, I think are all going to make it to various degrees. I think probably the most questions probably around Naka, just not sure what the plan is there and like what they'll do. I never understood the go invest in other companies around the world thing in the first place. But they'll get swing after swing after swing because of relationships and because of Megaphone. So like
Right.
at some point, if they figure something out, they're going to be able to promote the heck out of it. And they deserve some credit for having the conference and having the 3 million follower Twitter handle, and like they'll get people talking about it if they ever figure out what they're doing.
Gotcha.
So I think they're all okay in the long term, and they all own a lot of Bitcoin, which, as we can tell from the price today, like that's a smart thing to do.
Yeah, no, fair. Great, good overall summary there. You think you hit on quite a few things. Some of these companies, as you're suggesting, will be okay because they're in certain regions where structurally they're just advantages for people to own those equities. There's some companies still based here in the U.S. that can either use, get creative with their financing, might get to scale where they might be able to issue these preferreds, or they're building some sort of all-star teams